Welcome to TradeTheMBI.com. This is John. This report is for the 7th of February. And, well, from the short beginnings that we saw developing up here, and we've come down, we've filled in, as I was talking about, the positive extremes that had, caused the market to get a little bit overpriced. And so this correction, while quick, markets fall 66% faster than they rise. This has always been the case, and why it's always so shocking to people when it happens, because it takes so many days for all these little increases, and then it can be wiped out so fast. And that is a liquidity issue, and we talked about, the Fed pulling out of being so active in the markets, and this is exactly what you get, because if you saw this traded during intraday, it was thin liquidity, and that caused some pretty massive gyrations. Some of this was that volatility trade that some people don't even understand what they were thinking, but it was one of the largest trades that has taken place. People shorting volatility because they thought that just because the market was going up for a little bit that it would continue to do that, and it was already at historic lows, and it's a simple mean reversion. All it took was 2 days to upset a massive, what I think was just stupid trade, but okay. Needless to say, we got back above those positive extremes, but we're still in the red line. We've also got all the makings for a crossover, and we're in a continuation. So at this particular point, does it look super strong for a return back? We may just trade a little bit flat here. I believe this candle, if we look at it from this is just the DOC paint, but if I had the MBI on here, you would see a big white candle. And it's just a little premature because we're still fading from a shakeout in all those items until that even the blue flattens out. It's unlikely that you're going to have a sustained turnaround. Now, you can get a sharp reaction, which can often happen on this kind of an exacerbated move, but more likely than not, we need to see either that steel cross above the cyan and show us that short-term buyers have really continued to push through. More importantly, you need to see a stopping of this decline from the long-term, mid-term buyers. They need to come back into it. And this would have been the time where funds would have started to buy, and I'm sure that's why we saw this turnaround, because they probably took advantage of the huge discount in pricing and just bought up all that massive volatility, which is why we turned around so quickly after all the margin calls came through, which you love Wall Street. Anyone who makes a mistake, they're going to pounce on you. That is the nature of this setup, that we were on the right side of it again. It's become typical, I guess, so we don't really think much of it. So the euro, potentially facing its first possibility of a little bit of filling back some of these positive extremes, going all the way back from here and even further, all of these, where we had the initial breakout. So that'll be interesting to see if it follows through. It hasn't quite happened yet. You had this cyan over the midterm buyers, which was enough to give it a little bit of softness, but you have a complete reset of short-term buyers. So it's just interesting that it's quite a bit out of the range that was agreed to. And of course, bonds again below that 120 critical level. We've had this for, a year plus between that range of 120 and 113. So it's been on the high side of it, and I think that it's going to be interesting, because with the amount of money that needs to be borrowed and whether or not a budget gets squared away, there's going to be some interesting dynamics, and I think that politics is certainly going to have its impact on the market. Maybe a little less than it might have if the Fed had been as active as they had been. So the fact that it's changed is, that they want to shut the economy. You heard people even yesterday, I was watching the press conference, and they were talking about, are they concerned about inflation? The White House spokesman's like, we're just happy there's growth. And it's like, yeah, quit worrying about inflation just yet. That's already built into the equation. Oil has been in a retrace here for a little bit. It hasn't stopped at this point. We actually may get a strong DOC spread here. We've had pretty decent strength here with the cyan under red. We just had a couple of warning points that popped up, and that created a little bit of softness. And then the other day, a lot of times you'll get this when they've got to trade out of other items, you need liquidity, and you have to get out of other positions that you otherwise would just keep. It happens a lot with gold, particularly commodities. Whenever there's a big sell-off, usually people have to liquidate some of those positions and transfer funds, and that usually creates what you wouldn't expect. You would expect a flight into some of those commodities for safety purposes. So we had our complete decline going in here, and then we started to develop an interesting basing as the negative shakeout started to turn. As we came through here, and probably would have ignored this buy coming up above the 23%. I would have expected to move to the 50, which is exactly what happened. Interestingly enough, though, you had the cyan below red, and then it popped back above, and you would have thought, oh no, I'm on the wrong side of the trade. Only it flipped right back, right here, pretty much almost identical spot of the closest from before. And that led to a fairly decent little buy pump until we ended up with the small DOC spread that didn't quite have, you had the decent reset of the steel. And so that was enough to just keep it flat, but it returned to the 50%. And then, of course, then it made it back up to the highs with the complete cyan below and complete reset of it. So looking okay from this particular standpoint to sustain itself at this particular point. Not a whole lot of short activity going on there. Now, how do we break the 5K down? We're going to have to squeeze this chart into oblivion just to get the day's action. I mean, that's craziness. But it was interesting because we started off with the nice short, and when you compact it like this, you can start to see that it really wasn't that disorderly. As erratic as it was, the key element I noticed was we finally got, for the first time, reset of the steel, which meant that short-term buyers were liquefied, which to us is not that big a shock because coming into the 5th of the month, we would have expected new fund money to come in. But this was all pre-market move. So this was a staggering pre-market move that had a lot of positive extremes, and what it really did was came back and pretty much retraced a huge portion of it. I mean, if you look at it from this standpoint, the mean would have been somewhere right about this range, and that's exactly where the low came through if we look at it from right there. So we had the pop, these were the mean high areas, you had a little bit above, a little bit below, and that's exactly where we returned back to. It filled in most of the positive extremes anyway, but this was a massive move, pre-market, that formed what most people would call as a classic double top, and a beautiful DOC spread here with cyan moving above. It's very classic setup within that one. The first one wasn't bad either. I mean, it was certainly doable at that point because you also had the brown flat. These other ones weren't working because you had rising of the shakeout brown here. And you can always look at your chart to go back and see those. But as we slide forward, once we did the retrace, we really weren't getting any resets until right about here when this started to move, and it came back to look like it was going to be a mean move, but the cyan dipped below the red, and that gave us the nice push. So what I'll do is I'll just start expanding my chart here so that we can actually get a better view. Find it easier instead of doing the scroll feature to just grab the. There we go. And see that becomes a little bit clearer that way. And so this is always the interesting one because within some of these setups that have the pop above the 13 and the orange dip with the crossover, just as you're rising into your shakeout here, you're above the negative 13.5 line, you've got the yellow rising. Those are reasonable trades and can produce, and in this particular case, with the volatility increase, you can capture 10, 15, 20 points in some of these cases was quite easy. And likewise, even with the soft shorts coming back. So, but as we ended up towards the end of the day, massive rally started here, and we turned, look at that weight from the shakeout immediately above the 23%, and it just took off. And so that was a massive trade to the upside. And then I ended up shorting going into post-market, and it turned out to be a good call because we ended up fading here. right at the end. So all we've done is just pretty much started a reset. I think that you're probably going to see more of this volatility coming through. We still have some of these to fill back in. Whether that's going to happen right away, don't see that yet, but we do have enough weakness from that daily chart that I wouldn't be shocked at it down to 26.44. That would still be kind of significant. I think you've flushed out a lot of the softness, so we're probably going to start getting into people looking for value and whether or not any exists. Currently we're down about 24. So you could get as much as a 50% retrace into that up move. So far it's all pretty much in line. And yes, it seems dramatic with the point amount, but at these higher levels, no one talked about that. They just talked about the size of the point move and neglected to mention that it was 2 to 4% moves in some of these cases. And while that's significantly different than what we've seen, it's well within normal ranges. So none of this was hyper dramatic, but the definite liquidity change was noticeable. So that's something to bear in mind, because you could get large spreads between trades, and that's definitely a concern when you're trying to exit and or enter at a favorable spot. So keep that in mind. As always though, trade well, and I will post charts as needed.